Good morning, traders. It's Thursday, the 14th of January, 2016. It's 8:02 a.m. Chicago time, 9:02 Eastern. Derivatives trading involves substantial risk of loss and it's not suitable for all investors. Past performance is not indicative of future results. A few points to consider overnight. 7 explosions and gunfire were heard in Jakarta, Indonesia. Last night at around 7 p.m. Central Time. As a reaction to that, the ES dropped to about 10 points. We can see that the market has jitters on geopolitical and economic risk right now. Investors are very weary. JP Morgan announced $1.40 per share in earnings versus $1.29 expected. So it beat pretty good. 23.7 billion in revenue expected versus 23.1 expected. ES has rallied since the release. The release came at the low, near the low of the overnight session, and since then it has pushed up. The Bank of England left its interest rates unchanged at 0.5% as expected. At 7:30 Central, we got December import price index came in at negative 1.2% versus 1.3. Year on year, negative 8.2% versus negative 8.4%. Initial jobless claims also came in at 7:30 Central, just a half hour ago. 284,000 versus 275,000. Worse. Continuing claims 2.263 versus 2.21, again worse than expected or higher than expected. As far as what we should expect for today in releases, we're looking at EIA natural gas at 9:30 Central, expecting negative 172. And then that's it for numbers. Speakers, we have Draghi and Kerr at the Eurogroup meeting, which started at 6:30 this morning Central, 7:30 Eastern. At 8 o'clock, actually, right now, Draghi and Kerr speaking, 8 o'clock Central, 9 o'clock Eastern. And in aftermarket, we're looking for Intel earnings. We're looking for Intel earnings as the key player. Let's switch over and look at where we are in the technical picture here. Okay, so quite the sell-off yesterday. We had a bearish engulfing day. It was a trend day. Trend day is marked by the fact that we did not have a value area, a balance area. We had a small one in the morning, but we very quickly turned that into an LVN zone. The other indication of a trend day is the fact that the range is quite wide. It's wider than normal, generally greater than 1 standard deviation. But we closed the point of control. We closed with the point of control at the bottom end, but most importantly, the market closed at an extreme, which is very common with a trend day. So that's how things are shaping up. Again, we tested above the prior day's range. The prior day's range was right here, the prior day's high, and we got to 43 and a quarter. The hypothesis that was expected, the primary was for taking out the prior day's high, pull back to the close, chop around, and then push higher. Just to review what we expected yesterday versus what we got. That's the primary hypothesis. The secondary hypothesis is a drop, chop, and then rise again. And then the tertiary or third hypothesis, what happened here, in fact, I was reviewing the tape, and this is what it shows. So this is, you can see it here, this is yesterday's date. And this is what I drew for a third hypothesis, a test higher, pull down to the close. This is the close, chop around, and then explode downwards. That's where we left it again. It's at 11 minutes and 25 seconds into that recording. And this is basically what we got. We bounced down to the close, chop, and push down to the naked point of control at 82 or 81 even, or 81.50 right here. This point of control comes from October 2nd, and that's the template day for yesterday. So the market looked like it was recovering. We have had point of control migration. So we had 2 points of control that are the same. Then we have point of control migrated down. And then on Tuesday, we had what was basically the setup for a reversal, point of control higher, price actions higher than the prior day. The prior day's low and high are right here. So we had a change in value area, a change in point of control, and price action, and it looked like the market was likely to stabilize, and the expectation was for it to make a run up, as discussed yesterday, and it just could not do it. The overnight high yesterday was 46.50, which was also the non-farm payroll low, and it just couldn't take it out, and it went down and took out the overnight low instead and pushed through. So the expectation coming into this morning's today's Globex session was for a lower low, which we got in the overnight session. So it, for all intents and purposes, and no, I know that it seemed like the world was falling apart yesterday. It is auctioning logically. It is auctioning well. It is hard though to anticipate these reversals that we're seeing, and a lot of it is very much energy and China news driven type of trading. And again, in those environments, you get higher volatility, which creates more opportunity, better opportunity, but it also creates more risk. Those go hand in hand. In the overnight session, we made the low. We pushed up to the prior sessions overnight or low. Pulled back to make a higher low by one tick. This is when J.P. Morgan came out, and then we have run across the range basically on the upside. Something to note: there's a taper on both ends, although the low seems weak, weak-ish. Although it has had a taper, there's a taper on both ends, and it's a balanced profile. So right now, so today we have a fairly balanced overnight session. We're opening inside of the prior day's range, inside of the prior day's value, even though value doesn't really count on a trend day, because a trend day by definition is the market's attempt to rush to seek out value. And so there's really nothing we can glean out of this except that the market did not have to price anything further in the overnight session. If you recall, the overnight sessions have had a big part of the action, anywhere between 26 and 35 points in range lately, with heavy trading. This overnight session last night had heavy trading as well, 497,000. I want to remind you, during the rally period, before the holidays, regular trading, nothing special. During that period, our overnight volume was in the 120 to 130, 100 to 90,000 on the high side. 120 to 190,000 on the high side. And it's at 500,000 right now, and it's been above 500,000 for the last couple of sessions. So there's a lot of interest and a lot of activity, a lot of movement in and out of the market, which again means we're likely to have more or continued volatility going forward. So that's something you have to account for. With increased volatility, you have also the need to be more selective, but also you have to use wider stops, which means you're risking more of your account to participate. Using a six tick stop in the ES, if you're lucky, it'll not take that out every time. I think the probability is overwhelming on the side that the market will take it out, especially if you're someone who's getting in, letting the market move in your direction, a point or two, and then moving your stop to break even. You're probably noticing that you're just paying fees and commissions every day without any upside, which can lead to frustration, which can then lead to monkey or chimp trading, basically emotional trading. So it's just relax, let the market set for the first 15, 20 minutes. Let the higher participants come in. That's when the highest volatility comes in, is right at the open. Let it set, let it decide what it wants to do, and then form a bias based on context. Look at how it's auctioning, just like I'm talking about here, and I'll keep talking about. And then once you've set a bias, look for something to lean on. Look for a level to lean on, and go in a direction of the stronger side where there's a bigger push. And you can measure those. This is why I have so many of these numbers on my trigger chart. I'm measuring these by rotations. I'm looking at rotations. Which side is getting the bigger rotations? Here's a 10.25 point rotation, which used to be a whole day's range. Now it's one rotation. So we once I see this, I'm looking for a pullback to scalp long against the trend. If I'm going against the trend, it's a trend day. I understand the context is for the short side, so I'm not going to hold any longs on this day. Looking for a pullback for the continuation. There's the continuation. Then you see this big rotation down, so you back off that side. You look for the pullback. You stock short, and you're looking for, and again, 2020 hindsight and all that, but you're just measuring the current action, not what you want to see, but what actually is happening in the market. It's a lot like being a doctor. You don't prescribe based on, you don't prescribe a treatment based on what your concept is of what the disease should be or what the ailment should be. You prescribe your medicine based on what the symptoms are, even if they're not likely. You have to look at the facts, right? So we're basically acting the same way. You have to act on information that you have rather than information that you speculate on. And we're looking to trade the next move away from based on the information we already have. That's the basic concept. Anyway, if you're wondering where money is going, you just have to look at treasuries. Here are the bonds from the 29th, straight up. That's where money's going. Flight to safety. The money's moving into treasuries. This is pushing yields lower on the bonds, as well as notes and so on. Money's moving out of small caps. I'm sure you've seen what the Russell chart looks like. They've definitely been panicking out of there. Also, biotechs have been hit very hard. Transports, biotechs, energies. Energies actually the only sector that was strong yesterday. Exxon was up on the day, which I think is a big tell, as I mentioned in the S5 chat room yesterday. It's a big tell that the energies did not tumble with the rest of the market. I know they've been getting beaten, but I thought that was very interesting for basically the breadth on the S&P yesterday. Out of 500 stocks, negative 429, and as bad as 400 and about 40 were down. And the ones, many of the ones that were up were energy issues, Exxon and so on. And so I'm watching that energy sector to see what's going on there, see if there are some value plays there on a longer term basis. But I'm keeping an eye on that. Just something that's interesting to note. It's not applicable to today's trading. We're currently trading at 1893. The primary hypothesis for today is again a push higher into 97.75, a battle, and then I expect it to take out the 82 and a quarter, and then take out the overnight high to start heading towards 1866.50. There's no doubt that yesterday was an impulsive down day. An impulsive down day after a reversal up. There's probably more money, more longs. There are probably more longs that are likely to get squeezed out of this market. The overall picture is that we are moving towards areas that are considered of high value and are quite um, low risk for the longs, or relatively low risk for the longs, as we push down into the lower distribution of March through October. I expect that you'll likely see more and more positive delta as we move lower. As the market moves lower, I expect that you'll start to see delta rising as accumulation begins. So don't be surprised by that. Do not confuse that with this morning's hypo, which again is to push higher through the overnight high, test, and then fall to take out the overnight low. I expect yesterday's low to be taken as evidenced by the point of control that is at the low. The point of control is in line with October 2nd, and it's likely to fuel a push lower in towards the overnight low. The target below is 1866. I do not expect another flush today, although don't be surprised by it. There's a lot of bad news out there. But the more likely scenario is a slight lower low, and then for it to return back into yesterday's range and then settle there. That's what's expected for today. I'm over my time. I'll leave you with that. Stage 5 traders, we do have our AMA. I want to remind everyone the public AMA has been moved to next Thursday. It'll be at noon so that the market's open. We can look at some live action. But for today, the today's session is reserved for Stage 5's clients. So I'll catch you then. If not, then I'll catch you tomorrow. Mind your risk. Take care.